Joining us now for Stocking Up is Tom White at TD Ameritrade, taking a look at Nordstrom. Why is this back on your list?
Yeah, the retailers got hit pretty good yesterday, and what we're seeing is that move away from brick and mortar. But the reason I like Nordstrom here, because of the downturn that it's had, and also it's kind of best in breed. Valuations are a little bit higher. I go to Nordstrom. I don't go to Barney's like you do or anything like that. So
oh, thank you.
I go
it's
to,
more like TJ Maxx.
I go to Nordstrom.
For me.
It's like all in one-stop shopping.
Right.
If I go to a store.
Right.
Valuations are really low in there. It still pays a great dividend of 3.4%. The stock is off 30% since the beginning of December. So it's a good entry point. Yesterday, what I did was I bought the shares and I sold an upside call against a typical covered call strategy where I can take advantage of that great dividend yield, own the stock, but I can lower my break-even point because premiums in the May options are really high due to the upcoming earnings event in that month.
Well, since we're shopping, it's an easy segue into Visa.
Yeah, Visa, consumer confidence at record levels, not seen since the dot-com bubble of early 2000s. So with the consumer compromising 70% of our economy, everything's going well. The economy's over in Europe, in Asia, they're starting to grow, and that's a big growth segment for Visa, is over in India and over in China. And we're seeing a big pickup in their economies also as everybody's recovered from the recession in 2009. So
you like this stock?
I do like this stock. What I'm doing for a strategy here is just kind of waiting for that pullback. They've got earnings mid next month, and what I'm waiting for is that to get back down to that $85 share level. I don't know if it's going to go there, but I've kind of drawn a line in the sand and said I'm not going to get long this stock until it hits that $85 share level, and it's trading about 2 to 4% above that right now.
One last stock on your list is Qualcomm.
Yeah, Qualcomm. The whole tech sector has been in a massive rally mode. And what we've seen out of Qualcomm is they've got a little bit of litigation worries here. They're getting sued by Apple. The FTC opened an investigation about some of their licensing practices. So the stock's down about 13% in 2017, while every other stock in this sector has kind of exploded, from Apple to Intel to Oracle. So it's kind of lagged the whole sector because of that litigation risk. They've got earnings in 2 weeks. So what we're expecting out of the stock is maybe a jump up and maybe a beat on earnings. And what we've seen over in the option market, in which I focus on a lot, is we've seen a lot of call buyers in there, whether it's the April calls that are just out of the money or the May and June calls where they're accumulating positions, I think, expecting that beat on the upside.
Well, thank you for coming on the show. Have a great trading day.
Thanks.